Okay, welcome back, everyone. Let's get right into the stock market technical analysis. We now have the Fed out of the way, and the market's really free to trade how it may. So, what we're going to do is go through the broad markets. We'll look at some individual trade ideas. We'll kind of talk through things and wrap up. The Fed obviously did not do anything. They did not hike rates. They did not cut. They did, however, indicate and starting to confirm, I suppose, that the market is anticipating rate cuts next year in the spring, and the Fed has actually started to also confirm that. A lot of the time, it's pretty funny though. The Fed, for the most part, just follows, at least this Fed, just kind of follows the market's anticipation. They just kind of, it's, to me, it seems like they kind of look at the bond market, they see what the Fed fund futures traders are, where they're setting things, and then they just come out and confirm that. And try not to change or spook the market by just confirming what the market is expecting. That's what they did, so that's kind of interesting. We'll look at that. We'll want to look at the dollar because obviously that has an impact on rates in the dollar. Starting off with triple Qs, no real change today. You can see here, if I look at the daily chart, we are just, basically flat right now. We'll probably close today flat, I would assume. But there's no technical sell signals. There's no reason to ultimately exit a trade if you're long. If I go to the hourly chart and kind of mark it out like this, that's about the trend line. It's been walking up into the Fed, and we're still just kind of still within that trend. The high right here, 405.30. If I go back to the daily, I've got that marked out. That's about 405. If I roll out, that is the all-time high, or very close to the all-time high there in triple Qs, and we're basically right there at it now. So I definitely wasn't necessarily expecting us to be up here at these all-time highs. I haven't been shorting triple Qs recently because, again, there's been no sell signals. We also, if I look at the RSI on the daily, we don't really have that divergence. Let me see if we do have it from back here, but we took it out right there. So I can extend it. We still have it, but it's just barely hanging on is basically what's going on there. The PPO, it definitely still has that negative divergence. So we'll give it the benefit of the doubt and say the divergence is there, but no sell signal. All right, we don't have a break of trendline support. We don't have a reversal candle. This potential island cluster top here that I was pointing out, that's pretty much null and void at this point. I would say that's no longer viable. So we're not looking for that. Looking for some sort of a sell signal. Interesting enough, when I glance over at the FANGs that I have and the Magnificent Seven that I have up, most of them are actually being sold today or flat. Apple's kind of hanging in there flat. Microsoft's, getting sold into, and Google. So flat or being sold into. And so that tells me, if I look at the equal weighted index, it's up 1%. So they're selling the Mag 7 today, and they're buying some of the weaker tech stocks. So that's something to kind of pay attention to. The market can't rally. It's not going to rally without the Mag 7. So if there is rotation happening right now from the Mag 7 into some of the other sectors, the market will either hold sideways or move lower, especially if they're selling the Mag 7. And so that's just something to look for. The Mag 7's the leaders because they're heavily weighted. All right, it's the mechanics, it's the math. All right, the weighting drags the sectors down due to these things being heavily weighted. So if they're going to sell these things, the market's going lower in general. So we'll keep an eye on that. Again, no sell signal today, so moving on. Okay, let's flip over to the dollar. This is the dollar futures DX, and you can see post-Fed, the dollar is really taking a beating. That's a pretty sizable move in essentially 2 days, or really a day and a half. You'll see here the dollar's down 2%, 2.25%. That's a currency, the U.S. dollar, losing 2.25% against other currencies in a matter of 2 days. That's relatively pretty swift move. So we'll keep an eye on that one. I don't have, I think there's some support right down here at about 163 on the dollar. Bigger picture, I don't have these charts completely marked up for anything big, but we do, we would need to take out some of these kind of lower support levels where we've had several reactions to indicate a larger move. Otherwise, we're just kind of still in this sideways chop range. But that is the dollar. It is obviously taking a beating today. And then if I flip over, obviously gold, I'm looking at these gold miners and kind of gold related stocks, silver, all up, decent today, pretty sizable. And I did point out Newmont as a trade idea in the video yesterday. It just, again, the technicals were definitely set up for a rally. And that's what I talked about. This is your, just to reiterate that, you can go back and watch the video from yesterday. That's your bullish falling wedge. You've got bullish divergence on the momentum. You have and zooming in, and you've got a breakout right there. Breakout and a back test. And this was the video yesterday saying, okay, we're back testing support right now. It's very objective to take a long position here. It is ahead of the Fed, so it's obviously higher risk. But, higher risk, higher reward. That's how it always works. And then, obviously, it was a very constructive chart because we were sitting there at support. And then from that video, you can see what happened. Basically, they rallied this thing up at the highs today. They've up about 11% in a matter of really a day and a half. It's up 11%. That's a pretty sizable move in a day and a half. Now, again, I did talk about the widest part of the wedge. Oh, don't need my fibs. The widest part of the wedge here is really about there. So that would mean the projected target is somewhere up in the 48 to 49 range, somewhere right up in there. So again, I said yesterday that was about a 30, I think it was about a 36 or 30% bounce. It's already up 11 of that 30. And I think there's more upside. All right. We do have the 200-day that we're contending, we'll probably contend with for a little bit. But ultimately, I do see some more upside. Probably another maybe 11%. There's a reaction high right there. So, you start to get in that area. That's probably close enough. But again, that's what I'm seeing. And then GDX, just to cover the broad miners, because obviously the Fed, starting to cut is, like I said, falling rates is bullish for gold, and especially gold stocks. GDX on this daily chart, zooming in, we now have 3 confirmed. Well, sorry, we don't really have 3. I guess we never really got down there. So yeah, I can't actually say we have a trend line yet. Seems like we're starting to build this price channel here, but we don't have that third reaction down on that trendline support. And so yeah, we'll continue to keep an eye on that. LLY, Eli Lilly is kind of frustrating. I'm looking for a little bit more proof here because, again, I pointed this out as a good short setup, and I still think it is, but we just haven't had that defining sell signal. You've got negative divergence, very clean and clear negative divergence. You have this upward price channel, lots of reactions to verify that support line. This was the sell signal kind of right there where you broke trend, but it hasn't been impulsive. And what you can see is it's been chopping around. They've been trying to hold it. Look, down, back up, down, up, down, up, down. Okay, so, again, this is a decent sell signal today, down 3.5%, but it looked that way right here as well. It was very, it looked like a good sell signal right there, and then the buyer stepped in the next couple days. So I need to see a close, all right? I don't want to see the buyer step in intraday, and that's what's been happening. They've been selling it down, and then the buyers have been coming in intraday and bidding it back up. So I really want to see an impulsive breakdown, an impulsive close, where the buyers just aren't able to bid it back up, and that we'll use that as our sell signal. If we get that, I can see basically some support. This is gap entry down here, 503. So I think we head straight down there, and then there's gap fill right around 456. So those will be my 2 levels. TLT, which is the 10-year Treasury, to me looks like we have a breakout, which means that's significant. On the daily chart, you've got several reactions right here, verifying that is a downtrend line. And then if I zoom in, we've been marching up, TLT's been marching up this uptrend line right there until it ran right into that downtrend line, kind of chopped around, but yesterday, and again today. We're breaking out. It's breaking out above that downtrend line. There's no divergence, so that's significant, and that means interest rates, they actually are falling, at least on the 10-year. You're falling below the 200-day. This is the TNX, the 10-year interest rate. So it's, I think there's a change going on here where interest rates are starting to drop. Now, the market, at least in the short term, is interpreting that as a bullish sign. But often what you'll see in business cycles, if you just go back and look at all the recessions that we've had, and usually the recession doesn't usually get started, and usually the worst part of the market doesn't happen until the Fed's actually cutting rates. Because what's happening is the economy is actually weakening, and the Fed is cutting rates to stimulate the weak economy. So a weak economy usually doesn't fare well for stocks when companies are reporting really weak earnings, and ultimately the Fed's trying to support the market. So, the short-term reaction is the market just loves the juice and it's going higher, but that could be just short-lived, all right? I'm not saying it is. Perhaps the market is going to continue to rally on this kind of mania of the Fed cutting rates. I don't know. So we'll use the charts as our guide. Again, there's no sell signals right now in the tech stocks. I just don't see anything. So no reason to be short those. And I'm continuing to look for other setups. Okay, keep it short. I'm going to wrap it up. I'm going to continue to scan for kind of objective trade ideas, good trade ideas. I'm not going to just tell you guys to jump on and chase. But looking for objective trade ideas. Now, if the market's going to start to break higher and break out, and we're going to have some sort of maybe a blow off top or a next impulsive leg higher, which now, I'm starting to potentially see signs there for that, but I still don't see enough. I'll let you guys know what I'm seeing, when that happens. All right, I'm going to wrap up. Thanks, guys. Leave me a thumbs up on your way out. Drop me a comment. Catch you on the next one.